Well, good afternoon, everybody. My name is D Skeels. I'm a director with the British-Kazakh Society, and it's a real pleasure to welcome you all to this second Oil and Gas and Renewables event and its first panel webinar. So today's event is the crises affecting the energy industry in Kazakhstan, and of course we're dealing with both COVID and the oil price collapse at the same time. We have a great panel here who have, what shall I say, extensive experience in Kazakhstan, either living there or working on the country over quite a number of years. So with that, I'd like to hand you over to Michael Denison, who will, from BP, who will introduce the channel and the panel, and I hope you'll enjoy and moderate, benefit from this event. Thank you.
Thanks very much, David. Welcome, everyone. It's great to have such a very strong response to this particular session. Time today is quite tight, so I'll quickly introduce the panelists and ask them to speak for no more than 10 minutes. And then after that, we should have about 15 minutes available for questions and answers. So please do type in your questions in the Q&A box, and then I will ask them afterwards, after the 4 presentations, to the relevant panelists. So we've got 4 panelists with us today. Kate Mallinson, in order of appearance. Kate Mallinson runs PRISM, which is the leading UK political risk consultancy on Central Asia. Many of you will know her. She's spent well over 2 decades in the risk management sector, working principally with extractive companies in Kazakhstan, and is very well placed to advise companies on the business risks, the political risks, and to look at issues like regulation and government stability. Kate also works with the Foreign and Commonwealth Office as an advisor and is an associate fellow on the Russia and Eurasia program at Chatham House. The second speaker will be Dr. Nigel Gould-Davies, who edits Strategic Survey and is the senior fellow for Russia and Eurasia at the International Institute for Strategic Studies, IISS. Nigel's got a foreign office background and latterly was head of the economic department in Moscow and also ambassador to Belarus. After he left government service, he worked for BG Group, focusing on Central Asia, policy and corporate affairs, and then has returned to his academic posts, and he's written a book called Tectonic Politics, Global Political Risk in an Age of Transformation. And his PhD was in political science from Harvard. Third is Mike Ritchie. Michael is the editor of the leading weekly publication on energy in the region, Nefte Compass. I'm sure many of you subscribe to this publication, certainly we do. And he works for, in the past, for Reuters and for the Middle East Economic Digest, and he has a degree in Oriental Studies from Durham University. And the last presenter in order is Nick Coleman, who's the senior editor of for Oil News at S&P Global Platts. And he focuses on Europe, Russia, and the Caspian region, based in London. He's worked for many years across the former Soviet Union, reporting on energy developments, and was Central Asia correspondent for AFP news agency in Almaty. And he is a graduate of Goldsmiths College, London, and of the University of Essex. So what a great panel we have. I'm going to go straight into the panelists. So Kate, you're going to look at the politics. Would you like to kick off?
Okay. Thank you, Michael. I'm going to share my screen. Good afternoon to everybody, and thank you to David and Michael for the introductions. As Kazakhstan's first president, Nur-Sultan Nazarbayev, stated last month, Central Asia's largest energy producer, Kazakhstan, is facing a perfect storm with the collapse of the oil prices alongside the economic impact of the COVID-19 pandemic. Just to set the scene, the coronavirus arrived in Central Asia comparatively late, Kazakhstan reported its first cases on the 13th of March. The case rate has risen sharply since then, but at nearly 6,000, the rate is still relatively low compared to global figures. And so far, there have only been 32 deaths. President Tokayev and his government have reacted resolutely and rapidly, both in terms of containing the virus and supporting the population and the economy. Kazakhstan was the first Central Asian country to introduce a state of emergency 2 days after the first case was registered on the 15th of March. But even prior to that, in late January, Kazakhstan suspended bus and air travel and shuttered the state border on the 8th of March. This week, in a bid to reduce economic hardship, President Tokayev ended the state of emergency, stating that the peak of cases has passed. Despite these claims, it's not entirely clear whether this has happened, as the virus is now spiking in the regions of Kazakhstan, following a later start there. Lockdown provisions remain in place across the country with specific variations between the regions, depending on the situation. And the Republic has introduced a 3-stage regional lockdown easing strategy. Cases should not rise by more than a certain percentage. This is 7% in stage 1, down to 2% in stage 3, in each stage for a week. The government criteria of 7% was recently raised from an initial requirement of 5%, suggesting that they want to push ahead and open despite struggling to get the numbers down. A peculiarity of the Kazakh crisis is the high number of medical professionals that have contracted COVID-19. In April, just under a third of all cases in Kazakhstan were among medical personnel, mainly nurses from intensive care units. Given the critical role of nursing care and the absence for specific treatment for the virus, this has been a problem in treating patients and was largely blamed on an absence of PPE for the medical profession. Other issues and challenges include a lack of widespread testing and real-time diagnostics. If we just go on to look at the distribution of cases, as you can see from the blue line in this chart, Almaty is the epicenter of the crisis, with a case rate far outpacing Nur-Sultan, the black line below. While cases continue to grow rapidly in Almaty, the authorities maintain that these new cases are contained within quarantine zones. Cases have also grown rapidly in the south and the west of the country, including the oil-producing Atyrau, the thick red line, West Kazakhstan, and Aktobe regions. The first cases in these regions were registered at the beginning of April, which is why we're now seeing a spike in cases. Both Nur-Sultan and Almaty witnessed new spikes approximately 30 days into their crises. Also, the spike in numbers is partly a result of tests being returned to the regions from testing centres in Almaty and Nur-Sultan, and the result of extensive testing sponsored by Chevron. It is possible that if such extensive testing was being done nationally, other regions would see far higher case numbers. Atyrau, which has 450 cases, registered a further 90 cases yesterday at the BKS Oil and gas field based in Atyrau. In spite of a temporary slowdown of work, however, and reduction of personnel, output at TCO has not been affected, and progress of the Future Growth Project is reportedly unhindered. And no cases have yet been reported at the two other main energy projects, Caspian and Karachaganak. A significant number of these cases are a result of repatriation. Yesterday, the authorities in the North Kazakhstan region, north of Nur-Sultan, noted that every third case was a result of repatriation. And we still have several hundred Uzbek nationals gathering on the border between Russia and Kazakhstan at Orenburg, demanding safe passage through Kazakhstan back to Uzbekistan. President Tokayev has handled the crisis extremely well. He built his presidency on a promise of social protection and competent technocratic management. His prompt response so far to the crisis has won plaudits from the wider population in Kazakhstan and from observers. He has announced a generous Marshall Plan for Kazakhstan, pledging $13.5 billion in fiscal stimulus, which is almost 4% of GDP and compares to Russia's very modest contribution of 0.3%. Some of the offers, despite some difficulties in launching it, the government has done well in managing to issue welfare payments to almost 4.5 million citizens of 42,500 tenge per month, which is approximately $95. low interest loans, and also the Republic has promised the creation of 1.2 million jobs in the public works programme. And also during this busy period, the President has managed to boost his position with the removal of the Speaker of the Senate, who was attempting to divert executive power to the legislative branch during the state of emergency. He's also pledged certain reforms, including income tax, parliamentary opposition. One bill was approved today by the Senate, which increases the power of the presidency during a state of emergency, allowing the government to act more quickly. However, Tokayev's activist approach also means that he now owns the crisis, and he will be held responsible should a protracted downturn follow. In this final slide, I just wanted to look at a few of the political risks moving forward. The Kazakh population was already undergoing a period of kind of prolonged socio-economic hardship following the 2008 global financial crisis and the end of the commodity supercycle in 2004 and 2015, when Kazakhstan's GDP fell more sharply than the world average, and after several devaluations of the tenge. This February, before the crisis, the government recorded a 6.2% year-on-year rise in claims for unemployment benefit. And there's already been a palpable increase in the frustrations of the middle classes and a rise in urban activism. The recent kind of collapse in the tenge and further supply pressures have had an impact on food prices, as much as, we've seen a rise and noted as much as 30%, 15% on staple goods since the introduction of quarantine measures. And President Tokayev's social protection measures have been very welcome, but difficulties lie ahead with issues like the tax breaks and credit deferments, which will have to come to an end and are scheduled for the end of 2020, raising questions about what will happen to the banking sector and the impact on the population if banks begin charging interest again on unpaid debt. The downturn in economic growth, Nigel's going to speak about this in more depth, but the EBRD are projecting up to 3%. Will obviously also have an impact on foreign investors in the energy sector, from local content pressures to delayed VAT repayments, etc. And also perhaps the state energy company needing to be carried. Tokayev's future very much depends on the post-crisis recovery. The Kazakh population largely followed the government's directives and seemed happy with the measures. People seem ready to give up their institutional freedom and public liberty in exchange for the state managing their health. But with each week of lockdown biting on GDP growth and the significant impact on socio-economic conditions, frustrations are mounting in Kazakhstan just as they are in every country in the world today. But only this morning we heard of demonstrations and strikes in the Mangostar region, while a group of small business owners held a demonstration in Shymkent city calling for the end of lockdown. I think, Nigel is very well placed now to kind of go ahead and explain to you, how Kazakhstan and how the President Tokayev are going to face the challenges, the economic challenges, and the pledges that they've generously offered to the population. Thank you.
Thank you very much, Kate. So let me just offer a few remarks about the economy, the Kazakh economy, and COVID. I'll just touch on three topics. The first, the economic impact of the crisis. And as Dave noted earlier, of course, this comes together with great turbulence in global oil markets, which have hit Kazakhstan as well. Secondly, a little bit about the economic policy measures undertaken by the authorities to mitigate and compensate for the deleterious economic impacts of both of these developments. And thirdly, some inevitably more speculative exploration of what next and what are the implications for Kazakhstan going forward. So as Kate noted, Kazakhstan's responded very quickly to this crisis with impressive speed, especially in comparative context. I've just published a piece today with the International Institute of Strategic Studies on precisely this sort of comparison, and Kazakhstan comes out as a strong performer. It was on the 11th of March that the WHO declared a pandemic, and in the days immediately following that, Kazakhstan developed an effective response. It's been a strong performance. That inevitably has disruptive consequences. It means a domestic demand shock as people have been staying indoors and not making their usual purchases and so on. It means a supply shock as well, because of course, Kazakhstan output across a range of sectors is greatly disrupted by these measures. But internationally too, of course, Kazakhstan has been hit, as other countries have, by the significant reductions in international trade and investment. And in particular, for a major oil producer like Kazakhstan, it's not only a matter of export volumes, but export prices as well. An unwelcome complication in all of this was the collapse in March of the OPEC Plus agreement, which led to a pretty severe price and market competition between Russia and Saudi Arabia, in which others got caught up. The more recent deal has stabilized things to some degree, but all the signs are, and OPEC is saying as much, that there's likely to be a need for further cuts since. I think others on this panel will say more about the details of the oil story here, but we're looking at cuts for Kazakhstan of around 390,000 barrels a day. So put all of these things together, what are going to be the likely economic impacts for the rest of this year? So I'll focus on two variables here. One is GDP and the other is the national budget. So on GDP, the latest EBRD forecast just out this month forecast a 3% fall. Now that's slightly lower than the EBRD average wide of 3.5%. It's higher than most of the rest of Central Asia. Kyrgyzstan is an exception. And here we see the greater impact of the oil market disruptions disproportionately hitting Kazakhstan. This 3% fall that's forecast, and I suspect it may well be a little worse than that, contrasts with a growth of 4.5% last year. So you can see a sharp reversal on the cards here. Secondly, the budget story, and of course, as a major oil producer, oil and gas revenues are a major component of the budget. The budget deficit is forecast to fall from, to deteriorate from 2.4% of GDP to 3% of GDP. Now, in the shorter term, Kazakhstan is well placed to weather a decline in these revenues. It has a national fund created precisely for purposes like this. Amounts to around $57 billion at this point. In April, they made an $817 million transfer to the national budget. So we can already see that being drawn down. In the short term, there's nothing to worry about, really. But for all major oil producers with national funds of this kind, and Russia is another case in point, there will be concerns about prolonged low prices and export volumes. So much depends, as always, these countries on the states of external variables over which they have no control. Secondly, on the economic policy measures that have been implemented to mitigate the consequences of this for citizens. Kate has already touched on this. The support measures are indeed impressive. I calculate them as around $14 billion. As Kate said, around 4% of GDP. And that's been dispersed in impressively modern ways. So there have been concerns in other parts of this region and elsewhere that new technologies might be used to surveil citizens more intrusively in these times. Kazakhstan has been using them to distribute support to individuals more effectively, to the extent of millions of citizens receiving texts on their mobile phones asking them where they want to receive these funds and informing them of them. So that's, again, I think a pretty good and impressive performance. And some of the other measures that Kate mentioned too, deferrals on debt repayments, some reductions on VAT in certain categories of food, and so on, increases in pensions and other social benefits. So that's all been welcome, costly of course, but welcome. What next then, finally? So we've just seen the formal end of the emergency situation from Monday, the gradual lifting that lies ahead. of the measures that have been put in place. We don't yet know whether that would be able to continue or whether a second wave of infection would force the country back into some form of lockdown. We've seen that pattern elsewhere. President Tokayev made a speech on Monday. He set out in that speech a 7-point plan for developing the economy. Some of the things I found more eye-catching there, the determination to increase local content in infrastructure projects from 40% to around 60 to 70%, the intention to replace the current flat tax for incomes with a progressive tax, a quite resolute rhetoric that Kazakhstan now needed a new economic structure. The energy sector, he said, would not be the same. And he particularly pointed the way towards a more green energy approach. Not all this rhetoric is by any means new, but it may well be that Tokayev's, as Kate said, sort of technocratic approach to a crisis will create some kind of turning point, a drive forward that may accelerate some of the rhetorical plans for change and reform we've seen in recent years. The EBRD forecasts a leap back in 2021 of GDP up to around 5%. Now, that's, I think, a heroic and certainly very speculative assumption at this point. No one knows what the future of oil markets might be. There are a lot of known unknowns and possibly unknown unknowns as well about the course of the virus itself and specifically its impact on global energy markets. Will we have a return to something that resembles the normality we've known before, or is it more likely we're heading into genuinely uncharted territory? So any even shorter term speculation about the future must indeed be speculative. But I hope that gives at least some sense of the economic circumstances this crisis has created. The impressive, as I say, so far, range of responses of the Kazakh government, but the government itself, are well aware of the uncertainties and potentially perils ahead. Thank you.
Thank you very much, Nigel. That was great. Thank you. Before I move on to Mike to talk a bit more specifically about the sector itself, the energy sector itself, I'd just like to remind our listeners that they are very welcome to ask a question. Just press on the Q&A button at the bottom of your screen and then just type in your question. You can be anonymous or you can be not anonymous if you prefer. I won't read out your name at the end. I will just collect the relevant questions and ask the panelists. So I will not name anybody, but please do type in your questions to any of the panelists. So we'll move on to Mike Ritchie now from Nefte Compass, who will talk a little bit about the sector itself.
Thanks, Michael. Hello, everyone. Good afternoon. I was just looking back through Nefte this morning. We publish every month the crude oil and condensate figures, production figures for Kazakhstan. The last ones we published were in January. And this morning we got the figures for April. So in the meantime, of course, February and March have passed through, but the country's been in quarantine and we haven't been able to get them. So that's just a sort of one example of how that's impacted even just the statistics side of things. But January, it was showing the production was 1.9 million barrels a day. And, you know, as David Skeels said at the beginning, I mean, a lot of us have been covering this for a long time, and we'll remember when Kazakhstan had aspirations to be one of the top 10 oil producers in the world. But the truth is that production actually over the last few years has more or less started to stagnate. And the key factors in the long term there are the energy transition as peak demand approaches in the face of sort of rising renewables. Kazakhstan's going to have to compete for investment dollars around the world with other producers around the world. So that's tough on that front. But of course, Currently, we've got the biggest game changer of all, which is the coronavirus pandemic and the demand destruction that's caused and the accompanying price collapse, with all the sort of background from OPEC as well. And as previous speakers have said, I think Nigel mentioned that the OPEC cuts require Kazakhstan to cut 390,000 barrels a day in May and June, a bit less later on. And they're still working out how to do that, I think. And it's not going to be plain sailing. It looks like the big fields, which I'll come on to a bit later, will bear the brunt of it. The smaller producers, will likely get off a bit more lightly. Another key effect of this, specifically the price collapse, I suppose, is that there'll be a further delay to the IPO for Kazmunaygaz State Oil Company. It was planned to go ahead in October and November this year, but with all this uncertainty, that's looking less likely, and that might put on the back burner for a while. I mean, if we just, again, from the current position, if we rewind 10 or 15 years, barely a week used to go by without some kind of listing on London's AIM market of a new small company planning to take its chances in Kazakhstan. And now there's barely a handful of them left. I mean, I could mention just 2 or 3. Nostrum Oil and Gas, formerly known as Zhaikmunai, Tethys Petroleum, Caspian Sunrise, and formerly Roxy, I think that was. They're all, to a degree, I mean, Caspian Sunrise is making a little bit of progress, I think, there with some drilling, but they're all struggling to some degree in the current environment. So the focus in Kazakhstan is very much on the big 3 projects, which have been mentioned before. I'll just give a rough outline of where they stand at the moment. The biggest producer in Kazakhstan by far is, as mentioned, Tengiz Chevron. This is the TCO project operated by Chevron with its partners ExxonMobil, Kazmunaygaz, and Lukoil from Russia. As well as being the biggest producer for Kazakhstan, it's also the sort of upstream jewel in Chevron's crown. Currently producing about 650,000 barrels a day. As we mentioned earlier, it's undergoing an expansion of which will produce an extra 200,000 barrels a day. But that project was hit last year when they increased the costs by 25% to $46.5 billion, and they said that the completion would take an extra year, so it would not be complete until 2023. With the oil price now, say roughly, the economics are looking a bit dicey, and the payback period will be longer. But literally at this stage, I mean, they've obviously got no choice but to press on with that. As I think Kate and Nigel mentioned, that with the coronavirus issues there, they've had big outbreaks at the field. They've suspended some of the work on expansion. They've evacuated contractors, but actual production from the field hasn't really been affected. That's still carrying on, and that was, the expansion will sort of progress too. The second big project is, of course, Kashagan, currently producing about 400,000 barrels a day. This field's had a history of delays and cost overruns that many of you will be familiar with. The total spend so far on that project is eye-watering $68 billion. They used to talk optimistically about Kashagan producing over 1 million barrels a day. Now the sites are much lower. It hit a sort of a target of 380,000 barrels a day last year, and the sites are now on a sort of reasonably small or modest expansion to 450,000 barrels a day through debottlenecking and sour gas reinjection. But again, it's going to struggle at $30 a barrel, with oil at $30 a barrel. The NCOC is the operating consortium, North Caspian operating company, and the shareholders, just briefly run through them: Exxon, Shell, Total, ENI, CNPC, INPEX, and KMG. So, you know, well represented with the world's leading oil companies there. Just briefly on the third project, which is Karachaganak. It's one of the world's largest gas condensate fields, operated jointly by ENI and Shell, with Chevron, Lukoil, and Kazmunaygas as partners. As a condensate producer, we expect it to be exempt from the OPEC cuts. So this is a project that's sort of, you know, had its ups and downs. It's got a couple of sort of legal issues, I think, still holding it up a little bit. But they, you know, there's generally agreement that settlement will be amicable, and it's basically sort of ticking along. Plans for a big gas expansion pretty much on hold, I would think, at the moment. Finally, just say something about prospects for expansion in Kazakhstan. You know, they at this current price, it's a little bit tight. Plans by companies like ENI, Lukoil to sort of develop Caspian Sea offshore blocks, looking pretty untenable at anything below $50 a barrel, let alone at $30 a barrel. And you know, one of the other problems with, not problems, but issues that Kazakhstan has to deal with is obviously transportation costs are relatively high, as it's quite often far from its markets. But I think it's still got the oil in the ground. It's just a question of how they take that forward, and they're at the mercy of the market forces. That's it from me. Thanks very much, and I'd like to hand over to Nick now. Thanks, Nick.
Thank you, Mike. So I'm going to have put some slides up in a second, and I'm going to talk a little bit about the context first of all for Kazakhstan's development as a global oil supplier, and with a slightly different message on the face of it, maybe from Mike, because I still think of Kazakhstan as a growth country in terms of oil production. I'll come on, of course, to the very severe price impact that we've seen in the last few months. So I don't disagree with Mike that, especially for some of the small producers, they have, you know, they've struggled, and I think we still, you know, need to think about Kazakhstan as fundamentally a country of three very large oil fields, two of which are probably still on a growth trajectory. And I'm going to share the screen now, hopefully. Give me a second. Okay, so just to remind you of a little bit of the infrastructure, there's a map there, and the main pipeline I'm going to talk about is CPC, and this is really key to why I still think of Kazakhstan as a growth country, because if we think about the actual volumes coming through this pipeline to Novorossiysk, they really have continued to increase quite impressively in the last few years, and this is Kazakhstan's gateway to the wider world, and not just to Europe, as you might think, and as I'll come on to in a second. So this is actually, this is not entirely up to date, but it shows you the growth of CPC crude oil loadings at Novorossiysk in the last decade. Important to point out that a little bit of this oil is not Kazakh oil. About 10% of it is actually from Russian oil fields in the Russian section of the Caspian Sea. But the growth has continued into this year. So March was a record high month for CPC loadings at Novorossiysk, when they reached 1.2 1.65 million barrels a day, which is basically 2% of the world's oil production. How I reconcile that with Mike talking about stagnation is that, of course, you do have in Kazakhstan a lot of very mature oil fields which are in decline. So that it might seem like there's a contradiction there, but it's not as contradictory as it at first sounds. And just to reiterate the importance of Tengiz, still the driver of growth. I mean, it's been interesting to see how they've managed to increase production from Tengiz even before the expansion projects come on stream in, as we now think, 2023. They've just managed by incremental tweaks to the system and improvements and little bits of investment to grow the production. So the nameplate capacity of Tengiz is 600,000 barrels a day, but in the first quarter, according to the recent results, they actually got to 675,000 barrels a day, which partly explains why the CPC loadings have grown so much. And then Kashagan has been obviously a bit more up and down since it came on stream, but I think they got to about 420,000 barrels a day as an average in the third quarter last year, and it dropped off a little bit. But it shows you the direction of travel if they can achieve an entire quarter at averaging 420,000 barrels a day. So going to then talk a little bit about the price story, which has been, again, an interesting one. For people who are not accustomed to looking at the intricacies of oil prices, this might be a bit confusing, but I'll try and explain it. So Kazakh crude, CPC crude, is priced with reference to dated Brent, which is basically the North Sea oil benchmark, and produced by Platts. And so crude oil around the world will sell at a premium to North Sea dated Brent or at a discount to North Sea dated Brent. And this graphic from the last 5 years essentially shows you how CPC has performed. And you can see that in the first, in sort of the 2015, 2016, CPC is priced at a premium to, at times it's priced at a premium to dated Brent. So that's been, quite good for Kazakhstan, presumably. And slightly jumping ahead of myself, but you'll see that later in the last couple of years, CPC has actually dipped well below dated Brent and been selling at more of a discount. And the key to that was the agreement in 2016 by OPEC and Russia, which essentially pulled back a lot of production of sulfurous heavier crude oil and attached a greater premium to basically Urals crude and other similar crudes from the Middle East, so high sulfur crude oil. So in fact, you see the red line there, CPC actually declining relative to dated Brent, starting in sort of 2017. So that's partly due to the OPEC agreement, but it's also actually partly a function of success, meaning the production increase that I referred to earlier, because simply the more of this crude there is coming out of Kazakhstan, well, not harder, but it becomes slightly harder to sell. And basically, CPC has become very dependent on Asian demand in East Asia in the last couple of years. So South Korea, for example, is now quite a significant importer of CPC crude. Last year, it's imported 58 million barrels, or about 160,000 barrels a day. China is also taking CPC crude in increasing quantities. Last year, I think Kazakhstan was the 20th largest supplier of crude oil to China, and that moved up to the 17th place in the top 20 rankings for the first quarter of this year, selling so basically nearly 100,000 barrels a day of crude oil from Kazakhstan going to China. You might think going back to our pipelines, that would be going to China through the pipeline that heads east, but in fact, it's mostly CPC blend. So being shipped out of Novorossiysk, coming down through the Black Sea, through the Bosporus, probably through the Suez Canal, and all the way around to China's eastern coast, especially the independent refiners in Shandong province, who have very Catholic tastes for taking crude from all over the world. So Kazakhstan, in a sense, has become very dependent on the East Asian market. There are a few quality issues with the crude oil, but it's also benefited recently from a greater desire for low sulfur crude, especially among South Korean oil refineries gearing up to produce new low sulfur bunker fuel for the shipping market, and they've taken more volumes of CPC as a result of that. So what you will probably not fail to see on the right-hand side in my slide is a really alarming dip in value of this crude oil. So this is basically in April, CPC volumes. CPC crude was trading at a $10 discount to North Sea dated Brent. And when we consider that North Sea dated Brent fell at one point to about $16 a barrel, you end up with an outright price of $6.34 per barrel on one day in April for CPC crude oil. So a very alarming picture, certainly for the Kazakh authorities. Just as a, well, I could talk about, I won't talk about this now, but actually Azeri Light has fared much better over the years. That's the top line there. However, getting back to Kazakhstan, one consequences of this collapse in value of CPC crude is that some of it has been rerouted away from the CPC pipeline. Basically, more Kazakh crude has been routed into the Urals, into the Transneft Urals crude system. And in theory, if that were to continue, it would undermine the rationale for having a CPC crude grade. But you can see the reasons why here when you look at the green line, which is the value of Urals, which is basically selling in a lot of the time at actually a premium to CPC. So there are reasons though for keeping CPC as an independent crude grade. Obviously, Kazakhstan will be hoping the price will recover. A lot of the upstream producers like Chevron and Shell own stakes in the CPC pipeline. And I think I've probably spoken for long enough, but we can probably move to questions and take up any issues that I may have raised as well there. Thanks. Great, thank you very much, Nick. Thank you everyone for keeping to time. It's 14:44, so we've got an extra minute. So for the next 15 minutes, we're going to take some questions. I've actually listed about 10 of these, so I'm going to try and group a couple together and then direct them to the most relevant respondents. I'm going to just ask Nigel first. So we've got a couple of questions on the economy. Could you say a few words on how the non-oil sector is bearing up at the moment? And secondly, what the prospects you believe are for fiscal reform if Kazakhstan's break-even price is around $50. So if you just give us a sort of focus on those two questions, that would be great.
Yeah, okay, so non-oil. So any form of services in Kazakhstan, as in other countries, has been severely hit. And it's certainly welcome to the hospitality and catering sector that there is going to be a phased opening of cafes and restaurants and other amenities and facilities like that. So that's been clearly very severe. Agriculture too has been badly affected, in particular by the difficulties of transportation, including to export markets like Russia. So there have been cases of agricultural commodities literally rotting in or around the fields, and farmers inviting people, if they can get there, to simply take them, because otherwise they will go completely to waste. So services and anything which requires transportation, I think, disproportionately affected. But more widely, and again, as we've seen in other countries, any production process as well that requires groups of people to work together in a particular location. So all problematic. And indeed, to the extent that some of the oil projects like Karachaganak have managed to avoid or introduce a sufficiently rigorous testing and screening system to prevent any cases of coronavirus at all. Again, as others have said, not all of the major oil projects, but certainly some. To that extent, that's a notable and frankly exceptional achievement, it seems to me. On fiscal reform, yes, so as you say, the current oil, the budget clearing oil price around $50 to $55, that clearly has to come down, and there's, the government has announced an early intention to do that. That require a tightening, of course. Even with that, as I mentioned earlier, the budget deficit this year is scheduled to increase to around 3%. So there'll be spending cuts. There's the question of how exactly and when the temporary crisis era support will be phased out. Towards the end of the year is the expectation at this point, what we'll see on that. And then on the revenue side, so as I say, I think it's an interesting innovation that President Tokayev has announced the intention to introduce a graduated income tax, a response to the need for new revenues in a belt-tightening time. And again, part of a global story I think we can expect in other parts of the world, the expectation that taxes in some form simply will have to rise if the world is not going to become awash in debt.
Great, thank you very much, Nigel. I'm going to group a couple of questions now which deal with the projects themselves. The first one is, how can these big projects, which I guess Kashagan is sort of alluded to here, which have suffered cost overruns and delays, deliver value to investors now? So that's the first one. And the second one is, how does the panel assess nationalisation risk or the risk of renegotiation of contracts with foreign investors? So I'm going to direct that to Mike, and then perhaps Kate might want to say something potentially afterwards.
Yeah, well, the last one, the threat of nationalisation of assets is always present, isn't it? But and you know, in the sort of former Soviet Union, there's been a bit of a history here and there with the rule of law regarding these issues. Kazakhstan, I think, is pretty fair on this. I don't think there's been any issues with outright nationalisation. Of course, we've had some issues where Kazmunaygas has decided it may actually have even got out of some projects, but it decided it wanted back in. It's the host country. It's got every right to, obviously, and it's been achieved through a process of negotiation. And I think this was the case in Karachaganak. This went on for a long time. And I think it's done through the courts. I assume that everybody was satisfied with the end result. But maybe even David Skeels might know a little bit more about that. But sorry, David, to put you on the spot there. But I think, you know, I don't think there's any danger. I mean, as you know, as I mentioned earlier, with countries now competing keenly for investment dollars around the world, you know, they're not going to block their copybook by you know, giving investors a hard time at this moment if they can avoid it. So I think that is.
Do you see a threat to some of these questions just come in? Do you see a threat to some of these big projects, these big expansions that are planned for the big three?
Well, in terms of with the oil price as it is, I should imagine nobody's in a desperate hurry to throw good money after bad, sort of, not after bad, but I mean, you know, as I said, in TCO, they're very well advanced in this expansion project. They've got no choice but to press on now. So and of course the same applies to Kashagan. You know, they're $68 billion has been plowed into that project. It's going to take an enormous amount of time to recover that sort of investment. And each time, of course, that there's a delay, for example, as we've just heard with the TCO, the Tengiz, the budget price went up, and Nick mentioned as well that it's going to take a year longer to complete. This all means that it's going to take Kazakhstan, the host country, let's face it, it's Kazakh oil at the end of the day. It's going to take them longer to get back the rent they want for their assets. So it's not a pretty situation. I think in terms of further expansion projects, I mean, we were just looking at some that are planned in the offshore, in the Caspian Sea offshore blocks. I think Shell has sort of taken its eyes off the pearls, if I'm not mistaken. It was a big project it's been chasing for, I mean, we've been writing about this for over 10 years, I think, and they've even now decided that, in fact, this is going to be best left perhaps to somebody else to have a crack at. They're going to, is that right? Yeah.
Kate, do you want to add anything?
Yes, I mean, I was just going to add a few comments on the kind of risk of nationalisation. I think from what we've seen in Kazakhstan, the risk of nationalisation, expropriation is much lower than in other jurisdictions all over the globe. I would also add that resource nationalism tends to diminish during periods of kind of economic contraction and the lower oil price. We find that people are particularly grateful for the mouths that are being fed through kind of expansion projects like TCOs at the moment. It's going to feed families throughout the country. I would also, I mean, I think all eyes are more probably on the expiration of some of these projects for Kashagan in 2041, if I'm correct, and TCO in 2033. What with, you know, the uncertainty around the economy at the moment and you know, politically, who's going to be leading the country, and also in terms of First President Nur-Sultan Nazarbayev, who very much sees these projects as his pet projects, and he was there to kind of secure them at the very beginning. So I think that's more what we need to look at.
Thanks very much, Kate. I've got a couple of questions on the markets. We'll move to the markets now, and these questions, I guess, are for Nick. What are you described the recent fluctuations in price, but to what extent do they matter if the big projects have long-term offtake contracts in place? That was one question. The second one is a slightly more technical question, and I'll read it out to you. In view of the Brent crude oil price collapse and the recent widening of CPC blend differentials, primarily related to its disproportionate naphtha yield, what will be the response of TCO and NCOC with a continuation of these fundamentals in product demand and transport costs of the market, predominantly denominated in dollars, unlike Russia, where the alternative routes are in rubles? You can pick.
There's probably 3 questions in your 2.
Okay, if you could do your best in 2.5 minutes, that would be great.
Okay, so there was the simple one, which would what would be the reaction of NCOC and TCO, which essentially, obviously, everyone's going to be looking to try and cut costs, which is not easy, especially in a place like Kazakhstan. But I think, just coming back to Kashagan again, I think the emphasis already for a couple of years, really for several years, has been on incremental growth, small tweaks and improvements. I think NCOC has really played down the idea of any big ticket new investments for the foreseeable future. So then in terms of, to what extent does the price collapse actually matter when you have a long-term contract? I don't know the details of individual contracts, but I think there's going to be a great deal of flexibility for those contracts to actually reflect oil price fluctuations. this industry is all about optimization and getting the best deal and reacting to the market. So Kazmanai Gas, for example, has had agreements with Vitol. Vitol has become a significant marketer of Kazakh crude, and that's very much about taking advantage of, changes in the price curve. Certainly, some of the Korean refiners will have, quite long-term contracts, but I'm sure that there will be a component of that contract that has to reflect the Brent price. Finally, on something, there's something on Russia in there, but I can't quite remember what it was.
I think it was let me just have a look. Oh yes, are there any political issues? Oh, this is another question. Political issues with Russia from oil extracted from the Caspian. But the question that I was referring to was about the denomination in rubles. Given that the transport costs of the market are predominantly denominated in dollars, unlike Russia, where they are in rubles.
Yeah, not sure I grasped the question here. Just pointing out.
We've got plenty of others, so we've got time for one or two more, so we'll move on. If that's okay, Nick. So there was a question on the impact of the new quotas that were agreed following the big meeting on the smaller regional producers. I guess it sort of falls between many of the panelists as this one, but Nigel, do you want to have a go?
It's a good question. It's a difficult challenge for all of the oil producers to face, especially when you have these large projects. Just from the Russian perspective, so my understanding of the situation is that production sharing agreements were excluded, and so was gas condensate, and that affected the distribution of the cuts among the remaining eligible, so to speak, producers. And a consequence of that, Rosneft actually ended up facing a larger proportion of the cuts than its market share. So it was around 40% of Russian oil production, and had to, in principle, according to the Russian media, had to face closer to 50% share of Russia's total obligations under the new OPEC Plus agreement. Now that's Russia, not Kazakhstan, of course, but applying a similar logic, then if it's the case that PSAs are also excluded from Kazakhstan, indeed gas condensate as well, to be part of the Karachaganak story, then the implication of that is that the burden would have to fall disproportionately on the smaller ones. But that's simply a speculation and extrapolation from a neighboring country. I can't say with firm reliability that applies to Kazakhstan's producers.
Okay, thank you. It's a very interesting question. We've got time for a one-word answer from Kate Mallinson. Will there be increasing pressure on investors in relation to local content?
That's a very interesting question, and it's one that the President Tokayev, he mentioned on Monday in his announcement that local content is going to be one of the issues. I did mention it in my presentation, and I think it's an area to watch in times of economic downturn. The Republic does tend to turn more to investors for various issues, including VAT returns. So yes.
Thank you. Great. Right, that is all we've got time for. So before we close, before we reach the hour, thank you very much to all the panelists and for fielding the questions. I'll hand over to David to conclude this afternoon's session. Thank you.
Very good, thank you, and thank you, Michael, and to all the panel for that, what shall I say, exceptional, broad and in-depth coverage of the industry in Kazakhstan. In addition to those parties, I'd also like to thank Samruk Kasina, our key sponsor to the British-Kazakh Society, for its support, and of course all the attendees today. For the British-Kazakh Society Oil, Gas and Renewables Group, I'd like to advise that this is a very active group now. we'll have at least 2 further events this year. In September the 8th, we will have another panel discussion on energy issues, which if we are deconfined, we will hold it at the NEO Law office in London. And then in November, the last probably event, an event which will be focused primarily, or in fact totally, on renewables in Kazakhstan. So with that, again, thanks for all the attendees, and we hope those who are not members will see the activity of this group and the society itself, and sign up for the next event, which we'll look forward to seeing you at. Thank you now. Bye.
Thank you very much.
Thank you.
Thank you.
Thanks.
Hey.